Hey, what's up, Internet? This is Andrew, otherwise known as Drewicious. Welcome to another part of my basement. Tonight, we're going to be talking about 4 questions that I use before every trade to help me avoid common mistakes. I'm going to share them with you. You can use them if you want to, or not. Whatever. We'll see you in a sec. Hey, what's happening? Welcome to the basement. Trying a new intro thing there. I don't know if it works yet. Welcome to Happy Pi Day. It is March 14th, and I missed the entire day. I totally missed it was Pi Day, and I didn't make a single nerdly joke today. I don't have any good excuses. All right, welcome to my basement. We are going to cover 4 good questions. These are questions that I use before taking a trade. They help me make sure that I'm making a trade I feel good about, and they are designed to help me be consistent and avoid easily avoidable mistakes. I'm going to share them with you. I hope that they are helpful, and if not, then you can leave them behind. Before we get started with anything, I'm going to ask you guys to do me a favor. If this video helps, if you enjoy my stupid hipster mustache, or the fact that I'm drinking wine out of a glass that also has a stupid hipster mustache on it, please click like. Feel free to subscribe to the channel. Tell your friends about me. I don't know what you'll tell them. There's a douchebag on the internet with a hipster mustache and drinking wine. I don't know. But anything you can do to help spread the channel is appreciated. So that's it. That's all I got for self-promotion. We're gonna go into 4 questions that I use. I can't believe that this mouse shows up over here. I'm really sorry. It's gonna be like there's a fly on the screen. It's gonna bother me the whole time. I will try to hide it. I'm gonna go through 4 questions that I use before every trade to try and help make sure that I am making good, intelligent, intellectual decisions, and that I'm avoiding some of the common pitfalls that beset some traders, especially newer ones. And look, I'm not even all that new anymore, but I still make these mistakes sometimes too. So the reason I have these here is to help myself, and I'm going to share them with you to see if they help you. So let's get into what those 4 questions are, shall we? The first question's about trade plan. Do you have a thesis and an idea what your entry and exit plan are, right? It's being mindful about what we're doing. Our next concept is the market structure. Do you know what the market is doing, right? And that's not just your ticker and not just your ticker in this very moment or in the time frame that you're looking at it, but overall, what's going on around you, right? Situational awareness is key and lacking in our culture right now, so don't be a part of the problem. All right, the emotional state. What's going on with you inside? I know that this is a little mushy sounding, but it is enormous, and I cannot overstate the importance of being aware of what is going on for you internally. And finally, risk acceptance, making sure that you are comfortable losing the money that you're putting out there. Right? Once you put it on the table, it's no longer yours. So let's dive into each one of these a little bit more. And I'm realizing now, because I had to shoot this video again because there was a problem with audio, that one of the slides at the end is out of order. Bear with me through it. All right, first question. First question I ask myself is, what is the plan? Right? What is it that I see that makes me believe I have an edge to making a profit with the given play that I'm looking for? So this does not need to be complex, and I think sometimes people shy away or gloss over a little bit at the idea of having to come up with a trade plan, right? It does not need to be complicated. Identify what is interesting to you, right? Is there a structure that you see? Is there something going on in the flow? Did you get a tip from a friend? Is there something in the levels or the technical analysis that leads you to believe that something is about to happen, right? Just have an idea why you're interested, which is not usually most of our problems, right? Like we don't always, hopefully, you don't just like show up, grab a ticker and like plunk down 50, right? You generally are looking for something specific, but be clear what it is. And more importantly, be clear about the conditions under which you will get into that trade and the conditions with which you will exit that trade. And that is whether it goes the direction that you want or it doesn't, right? So when will you get in, right? What has to happen to be there? And then do you have a stop loss, right? At what point is your trade thesis invalidated? At what point is your trade thesis completed, right? When have you reached your price target, right? What are you hoping to see happen? And do you just get out then? Are you going to buy a batch and leave some runners, right? Know what you're up for so that you're not just winging it when the time comes. So let's go look at an example. This is SPY. I know my stupid face is covering up the ticker, but trust me, it's SPY. It's a SPY daily with the big strong downtrend. We got a little bit of an uptrend here. We got up, we broke over, we're coming back down again. We're testing some lows. We're maybe testing the underside of that lower trend line. So my trade thesis, and this is not a thesis that I'm actually using right now, but it could be something as simple as I'm interested in getting in if the current ticker goes above its high, right? If tomorrow's ticker goes above today's high, I'm interested in getting in, and I'm interested in getting a price target at number 2, right? So I'll get in at number 1. If my trade thesis is correct, I'll get out at number 2, and if I'm wrong, I'll get out at number 3, right? If I swing below the previous low, or if the price goes below the previous swing low, then I obviously didn't get what I was hoping for, and I'm going to leave. I'm not going to hold on to it until we go to 0, right? That can be a trade plan. Perfectly valid, right? So just have that ready when you get in, and pause for a second. Don't just look at a ticker and make a decision. Come up with, here's what I expect to happen, and here's when I want in and when I want out. You can write it down. You can fit that into a single sentence if you want to. If you do a trade journal, which I philosophically encourage, and I'm terrible in execution at actually doing myself. But if you do a trade journal, this is a great way to keep track of it, right? I got in for this reason, and you guys, if you follow my alerts, you know that I've always got a thesis in. Here's what I'm looking for. Here's the levels that I'm looking for, and and I'm looking for breaks of structure, right? I tell you exactly what my thesis is and what I'm looking for in that trade. It is the same thing. I write it down in the alerts instead of in a journal. Sort of self-documenting. That's what I tell myself anyway. All right, moving on to topic number 2, the market structure. What is the market doing, right? Not just my ticker. I think a lot of traders, and this is definitely something that I did early on, I'd get into a 5-minute, time frame, and I'd stare at the ticker, and when it looked like it was going up, I'd get in, and when it looked like it was going down, I'd sell, and that was kind of my plan. And it's not a great plan because the awareness of what's going on around you is really important, right? Are the indexes green or red, right? Is the general market on the way up or the way down? What's going on the higher time frames, right? So you can look at all sorts of different stuff, whatever it is you need in order to build your structure or your awareness of what's going on in the structure, right? So you might be interested in what's going on with the indexes. I would absolutely encourage you to look at multiple time frames. I've got a previous video that talks about that. We're going to look at that on the next slide a little bit. If you're into flow analysis, you can look to find out whether sellers are piling in or sellers are piling on. And you can also look to see what's going on, right? If there's news going on, right? If there are, banks going into bankruptcy, you may be interested in not getting long on a bank. So these are all things that you can use to help inform your understanding of what's going on around you so that you're not making decisions in a vacuum. All right, so here's an example of, this is one of the dashboards straight out of my broker. I just grabbed, this is Adobe here on the right-hand side. So this is Adobe on the daily. This is Adobe on the hourly, maybe 15-minute. I can't read. Too small. Bad eyes. But so I've got different time frames here, and just sort of looking at them casually from a distance, and very heavily pixelated for me in this particular view. But look, the daily is telling a very similar story to the hourly or the 15-minute, whatever this is, 5-minute maybe for that matter. But look, we've got our moving average. I believe this is a 20 moving average, is starting to curl, right? Like we're starting now to see that the general average of our price is starting to head up in both the 5-minute and the daily. Okay, so those are two confluence points that indicate to me we could be on the way up. Let's take a look at what's going on in the index, right? I pulled up NDX here, NASDAQ, right? Just to see what's going on with NASDAQ, right? Does NASDAQ agree that we're maybe on the way up? Well, we see some kind of similar behavior here, right? The moving average is, in fact, starting to curl. We can see that we had a nice strong move up here, and this is maybe might be a bull flag, right? Depending on what happens here. So there are things here to describe that, yeah, maybe there's some bullish confluence here that we can use to support the idea that going long here is not totally unrelated to reality. And another one that I like to look here look at here on a pretty regular basis is VIX. I've got that down here, and as you can see, VIX is spiking a bit, indicating that there are traders who are concerned about downside risks, so they are buying more puts in order to protect their long assets. So this is an indication of volatility in the market, and there could be some risk here, right? So that's sort of this doesn't necessarily give bulls any comfort, right? We typically want to see that number lower if we're going long, but in this case, if we're taking an intraday trade, all of this looks okay, right? So that is my market awareness. I'm looking at the indexes. I'm looking at multiple time frames. I'm looking at indications. I might go find out, like if I check the news, I'm going to know that Adobe is actually getting ready for an earnings release, right? So that may also impact my decision, right? Do I want to get in right before an earnings release? Because those tend to be very volatile, right? And if you're playing options, you can get destroyed, right? So if you have a bias, if you think you know what you're doing, you want to get into a binary event like an earnings trade, that's still part of the market awareness. So bring everything you can to bear as you formulate your trading plan. All right, and our next question is about our emotional state. So how are you feeling right now? And I know that that question can cause bristles on the back of many people's necks. But look, I'm not trying to be overly new agey about it. The truth is, emotional dysregulation can really cause you to make some bad decisions. And that's not a flaw. That's not like, anybody being bad. That's just how we're built as mammals. Our emotions take precedence over our intellect. Our intellectual minds developed after our emotions. So emotions hit first, and it is our job to use our intellect to use that as a point of input, and to make decisions and not to allow those emotions to rule us. How can that mess you up when you're trading? All sorts of ways, right? FOMO is probably the biggest one. That's still one I fight with on a day-to-day basis, guys. When I see a ticker I was looking at or a move that I was looking for and it takes off and I'm like, that's what I wanted. Yeah, I still do it sometimes, guys. I still sometimes buy after the move. I chase sometimes. I'm getting better, but I can admit it, right? I'm admitting that to you guys because I want you to know that I'm not perfect, and it's okay if you're not perfect too, right? Like that's an area of opportunity for me to improve, and if that's an area for you to improve into, that's cool. Let's do it together. But that emotional state causes me to make bad decisions, right? When I see something happening, I knew it, and something starts rolling in a direction, or I jump into a ticker that I was interested in and I see it's taken off without me, I sometimes try to jump on. And, that has had ruinous outcomes for me in the past. Sometimes it works out, but it's not reliable. What about anxiety? Like, what if you're thinking about taking a really big position in something and you're nervous about it, right? That's a sign. If you're not comfortable with the trade you're about to take, right? If you're nervous, now there's a difference between being like healthily nervous or like aware, right? Paying attention, having respect for what could happen, and like freaking out about it, right? If you're gonna put a trade on where you're going to be sitting there chomping on your nails and staring at the screen and you won't be able to pay attention to anything else and you yell at your family, that's probably not a good trade for you. Too much size, right? Manage your risk, bring it back a little bit, and don't let the trade eat you. It's not productive if you make profit and your heart explodes, or even worse, if your heart explodes and you lose all your money. So keep your lot sizes comfortable, so that if you lose, it's no big deal, right? It is critically important. See the previous slide. It is critically important that you are emotionally comfortable with what you're about to do. I'm sorry, not the previous slide. This is the slide. What about euphoria, right? Are you ever just like on a roll? You've had 10 green trains, 10 green trains, 10 green trades in a row, and you just feel like you can't lose, and you look at a ticker and you're like, and you're just going to throw it on there and see what happens. I mean, that can work out, but it's probably not. Euphoria is not great either, right? Overconfidence can cause you to make some mistakes and not fully process all the information that's available and make an intellectual decision. So check yourself to find out if any of these things might be going on for you, because they will impact your consistency. And one more, that was the the premature slide. No comments. All right, our fourth and final question is, are you prepared to lose? Are you ready to truly accept the risk of the trade that you're about to take? So here's how I think about it. You can think about it however you want, but this is how I think about it. When I go into a trade and I decide what my trade plan is, and I'm just going to say, if I'm looking at a $100 ticker, and I'm looking for a $20 move, right? I want a 20% move. I will say I'm willing to lose 10 bucks. I'm willing to bet $10 that I can make 20. And if I lose my $10, that is money I put on the table. It's no longer mine. I would encourage you to think the same way. As soon as you slap it on the table, as soon as you take that trade, that money's no longer yours. Okay? That frees me up from feeling like I have to stop somebody from taking something that belongs to me. I have already given it to them. It's out of my hands. Now, I can, of course, cancel a trade. I can, of course, bail out. But in that example of a $100 trade, if I'm looking to make $20 and I'm willing to risk 10, I do not wait for my trade to get down to $91 and say, this is stupid, I'm leaving. I leave it. I leave it until it hits my stop loss. And if I lose my stop, if I lose my trade because it hit my stop, because my stop indicates where my trade is invalidated, my thesis is no longer good, I'm comfortable with that. That doesn't actually bother me. I was wrong. Whatever. It's okay. You're going to be wrong, and it is really important that you don't allow being wrong to get in your way for the remainder of your trades. Accept that it's going to happen, and it's not even your fault most of the time. There are so many forces at play in the market that you can look at a thing and you can say, this is a perfect setup. I can't lose, right? That's a dangerous thing to say. But if you look at it and you see a perfect setup, you say, I don't know, I'm going to give it a shot. I'm willing to bet my 10 bucks to see if I can make 20. Let it ride. See what happens. And if you're not right, it's okay. Look at it again, see if you could have done something better, and then move on with your life. But that's truly accepting the risk. If you put that money down and you are nervous about it, and you're staring at it, and you're thinking about all the things that are going to go wrong, if you're not going to be able to pay your rent, you took a bad trade, you got to size down, you can't do that, and you should probably step away for a little bit. Cancel the trade, get out, walk away. Right? But make sure that you are comfortable losing it if you put it on the table. And it will greatly reduce your stress during the trades. It will help you make better trades if you are comfortable with the fact that you are making the decision to put it out there and it's no longer yours until it comes back to you. All right, everybody, those are my 4 questions that I ask before every trade. Take what you like, leave the rest. I don't really care. Once again, if you can, if this helped you out, please go ahead and hit like, subscribe to the channel, tell some other folks. Otherwise, check back. I will probably have some other videos at some point. Until then, I hope you all take care. Hold on, wait for it. All right, everybody. See you next time. Bye.